Hey everybody, how is it going? Welcome back to my channel. Well, another day, another bloodbath in the market, and frankly, I'm getting tired of saying that. And I know you guys got to be sick and tired of not only hearing it, but also seeing it. So in this video, I just want to go over some market charts that might provide us a little bit of hope. In the very least, it will give us a little bit of perspective on how the market is performing lately. But I saw this chart on the compound and I thought I would share it with you guys. And this chart is showing the number of consecutive weekly declines for the S&P 500 of more than 5 weeks. And they're saying they just ended the longest run without one. So this thing says a few things to me. Number one, we've been in an unbelievable bull market for a very long time. If we haven't had 5 consecutive down weeks on the S&P 500, going all the way back to, it looks like, about 2011, so more than a decade. And number two, it also tells me that we are overdue for a bounce in the short term. And this is showing 5 consecutive down weeks, and we are down again substantially this week. So unless there is a massive turnaround the rest of the week, this is going to mark 6 consecutive weeks down. So that will go all the way back to the last time that it did this. The last 4 times that it did this, it did 6 consecutive down weeks. And, I wouldn't be a bit surprised if we had, another one after that, because this downtrend has been grueling. But this is also telling us that we are way overdue for a bounce to the upside. All right, so let's jump over to the SPDR, or the S&P 500 ETF, and see how it looks like currently. This is the weekly chart. So as we can see, we have 1, 2, 3, 4, 5 consecutive down weeks, and this is number 6 right here. So unless we have a massive turnaround, which of course could happen, I mean, the market can turn around very quickly and very sharply. So, but if that does not happen, this is going to be number 6 in a row. And if we look at the stochastic, we can see the stochastic has a reading of about, well, I guess we can see it says about 5.4 at the moment. So let's go take a look at the last couple of times the S&P 500 had this many consecutive down weeks and see what it did. All right, so taking a look at the market, the last time we had at least 5 consecutive down weeks in the S&P 500, we have to go all the way back to 2011, and it happened during this time period right here. You can see we had 6, so 1, 2, 3, 4, 5, and 6. Then we had a massive reversal in the market. It lasted for about 4 weeks, kind of chopped around a little bit, but then we eventually rolled over, and I believe on this big candle right here was Black Monday, and that was when the U.S.'s credit rating was downgraded by Moody's. But I'm just going to thinking about the psychology that people had to be feeling in the market back then. It was probably pretty close to what we're feeling right now. Seems like right now is probably worse, but after having 5 or actually we had 6 consecutive down weeks in the S&P 500, people had to have been thinking this is looking a little bit toppy. And then it only makes sense once you have that nice counter trend reversal to the upside. There was a lot of reluctant buyers out there. There was probably, a lot of rumors about this downgrade already in the market, and had investors very fearful. And then once that news came out, or if things deteriorated a little bit in the market was ripe for a sharp sell-off. So, and then we can also see it only makes sense that the stochastic actually had a little bit of a lower reading than we had right now, with 6 consecutive down weeks in the market. But the market is, in my opinion, it is ripe for a rebound, but it is going to be far from out of the woods just by looking at this chart. And just going over here to Wikipedia, just reading what they had to say about Black Monday, it just shows you how significant of an event it was in the market. But it says Black Monday 2011 refers to August 8th, 2011, when the U.S. and global stock markets crashed following the Friday night credit rating downgrade by Standard & Poor's of the United States sovereign debt from AAA, or risk-free, to AA. It was the first time in history the United States was downgraded. Moody's issued a report during the morning trading which said their AAA rating of U.S. credit was in jeopardy. This after issuing a negative outlook the previous week. So there was plenty of fear in the market that time. And it said by market close, the Dow Jones Industrial Average lost 634 points or 5.5% to close at 10,809, making it the sixth largest drop of the index in history. So it was definitely a very significant time in the market, a lot of fear in the market, just like what we're having right now. All right, so going back to the second to the last time that this happened in the S&P 500, we have to go all the way back to 2008. And I don't need to Wikipedia what happened back then. That, of course, was the great financial crisis. And if I back the chart out a little bit, you can see the market rallied off of that 2003 bottom, and it kind of ran up pretty nicely all the way up until the end of 2007, and then the market started to roll over. I think the current market resembles this chart more so than that chart from 2011, and certainly the market psychology nowadays resembles it more than that 2011 rollover. But this was the time period right here. You can see 1, 2, 3, 4, 5, 6 down weeks in a row. We had the stochastics pegged just a little bit lower of a reading than we have right now, but of course the week is not over yet, and neither is the downtrend, so it could certainly go weaker. But we had this nice bullish hammer reversal, but a very weak counter trend for about 5 or 6 weeks or so before we had another sharp rollover in the market. So I think the financial environment nowadays is full of a lot of fear, just like it was back during 2008. And if some more bad news comes into the market, like it did back then in 2008, when they had all those balance sheet issues, we could have another sharp sell-off in the market. All right, so getting back to the current trading environment, I swapped out the spider for the QQQ, which of course is the ETF for the NASDAQ. I'm going to tell you my plan right here, and this is not trading advice. I am not a financial advisor. You have to do what's best for your portfolio, but I'm just trying to tell you what I plan on doing. Plan on doing a little bit of tail risk hedging and selling some stock that I have been buying. I've been buying some stock these last few days in the market, and if we do end up getting a rally in the market that looks kind of like one of these numbers, which is probably going to be rather similar. I wouldn't be a bit surprised if we rally up to this 50-period simple moving average, or maybe even the 200, even though that seems like a long ways up. But either way, some of the stock that I've been buying over these last 3 or 4 days, I'll probably sell off most of that into that rally, and then I'll end up buying some puts on either the QQQ or the SPY, probably 3 or 4 months out, way out of the money. And so if we do get one of those deep rollovers in the market, those should pay off quite well. And not only that, the market will have crashed, and if those options pay really well, like I am hoping, you'll have a pile of money to potentially buy some stock near the bottom. Now, this is easier said than done. I've tried this a few times. It's worked out okay, not nearly as good as I expected before, the rollover happened in the market. So it's much harder to do than it seems. It's a lot easier to look at it in hindsight and be like, oh yeah, this was the perfect time to buy it. But either way, that is my plan to deal with this market environment, or what could be coming in the future. Let me know what you think could be coming in the future, because I definitely have no idea what is going to happen. But what I like to do is put a little insurance on my portfolio in case the worst does happen. If the market just continues to move higher, those options are going to expire worthless, but all of the stock in my portfolio hopefully will start going up, and that will more than make up for what those options cost me. But if the market does crash, I don't plan on selling very much of my stock. I plan on holding everything that's left for the long term, and if I do get a nice windfall after the market crashes, I can add to those positions at those lower prices. But let's take a look at some of the other charts in the market right now. Let's take a look at the spider first. Taking a look at the spider, we can see, maybe we need to situate this just a little bit better here, but taking a look at the spider, you can see the spider, of course, is selling off as well. You know, let me get the volume on here. Let's take a look at the volume. If I can get this thing to work. See, the volume isn't crazy on the spider. Let's jump back to the QQQ to see how that's looking. It isn't crazy high as of yet, but I don't know. The market is just in a relentless downtrend. The spider, it looks like it is definitely going to be closing near the lows of the day. And taking a look at the diamonds, you can see the diamonds, the same exact thing, the Dow Jones Industrial Average. Take a look at the IWM. I don't know. Just selling over top of selling over top of selling. But eventually there will be a bounce in this market. The question is, what do we do? You know, if it's a really sharp bounce to the upside, do we just hold on to our stock, or, you know, do we do something like what I was talking about earlier? But take a look at oil. I think oil was actually doing a little bit better today. It actually was. It gapped up, but it didn't really move around a whole heck of a lot. Energy was one of the few sectors that were strong today. And let's take a look at gold. See, gold made it down to that 200-period simple moving average yesterday. It had a little bit of a pop-up today, but not much going on with gold either. So, I don't know. Everything still looks pretty weak, guys. I'm not even going to go over any individual stocks because it doesn't make a whole heck of a lot of sense to look at any of that stuff until we get this bounce in the market. Everything just seems to be fading lower, so it's very difficult to be trading to the long side in this market environment. But if you guys see anything interesting in the market, please let me know down there in the comment section. Anything you could share with me would be greatly appreciated. I'm going to end the video right there. Thank you so much for watching my video all the way to the end. And until next time, take care, everybody.